of the top economic and business minds in the world will be gathering in Los Angeles next week to talk about economic recovery and financial reform. It's the Milken Institute conference, which always attracts the creme de la creme of world and business leaders. Now, Bloomberg Television will be there with live exclusive coverage. And our next guest will also be there. He's Jim McCaughan. He's the CEO of Principal Global Investors, and he directly oversees $215 billion in assets globally. He's also president of Global Asset Management for Principal Financial Group. And Jim, good to have you back with us. Trying to figure out where to start, because you've got Milken, you're going to talk about reform. I also want to talk about the markets, because we've talked to you several times, and you've been upbeat, still calling for about a 10 to 20% rise. Where are we? Still calling for that?
Over the year, that would be right. I started the year when things were still very bumpy, saying that the economic fundamentals were improving, companies would do better, and that should support something like a 10 to 20% rise in U.S. equities. I think we're on course to that.
I mean, is there something that you think that's gotten better, though? I mean, are you more confident now than you were at the beginning of the year?
One thing's got better, and that's that the economic growth is stronger than I expected. It's coming through with the home sales this morning. You're seeing it with GDP numbers. We would be looking at GDP growth this year somewhere in the 3 to 4% range, whereas we might have been thinking at the beginning of the year it would struggle to 3. What's really happening is confidence is building more quickly, and the inventory cycle is turning nicely, which actually is a real driver for confidence.
Well, let me ask you, Jim, because those new home sales numbers, a lot of it is everybody kind of running to take advantage of that tax credit, and that makes sense. I mean, what happens when that goes away and all the stimulus goes away? Does all the growth and the optimism go away as well?
Yeah, my belief is that the stimulus has had fairly modest impact. I mean,
really?
Yeah, the pure stimulus, the government spending, that's not what's turned it. What's turned it is the security of the financial system together with the inventory cycle, the business cycle. Think what happened after the Lehman bankruptcy. Every business in the world cut to the bone everything they could. They drove inventories right down. Those have turned around gradually as people thought it was safe to go back in the water. And that's really what's driven the economic cycle. The problem with stimulus spending is it takes so long to spend. You know, remember those shovel-ready projects? You know, they weren't really shovel-ready. And so it's actually that's more of a political activity to try and get confidence going. I really think the stability of the financial system together with the inventory cycle and the business cycle is what's turned the market.
Are we going to see hiring then pick up? I mean, you say earnings have picked up. We've obviously seen that. And you say companies cut to the bone. Is there going to be a recovery process where they take those workers back?
Now, the issue here is that jobs are created, and sustainable jobs in America get created by small and medium enterprises. The managers of those small and medium enterprises, which is actually our core client base, we manage, for example, 401k plans for about 35,000 small medium businesses across America. Those people are scared to hire because of higher taxes, higher regulations, higher healthcare costs. Over time, as the impact of regulations becomes clearer, as perhaps Washington calms down a bit, then you will see confidence building. Jobs growth is a 2011 and 2012 event in this economy. They've been too frightened by the political atmosphere to be aggressive hirers this year.
But again, as you pointed out, they really are kind of the engine behind the growth here. I mean, you say over time. How much time, Jim? And I mean, is it going to take too long enough that the stimulus that we've seen kind of put into effect and the momentum, we lose that momentum?
Well, I don't think so, because the economic cycle is extremely powerful, and we're at the stage now where the economy is no longer destroying jobs. So by the second half of this year, we'll be creating some jobs. By 2011, 2012, absent some really big change we don't see yet, should create quite a lot of jobs. I'm encouraged by the stock market, which is the best leading indicator. As you heard from the floor of the stock exchange, it's looking at its 8th up week in succession. Isn't that amazing, given the noise around financial reform, which would ordinarily unsettle the market?
Right.
All the troubles of Goldman Sachs.
Although that financial reform has gotten watered down. Matt's kind of pointed that out a lot.
As did the healthcare reform. I mean,
not as onerous.
Yeah, absolutely. But it still creates fears, because the debate and some of the proposals are frankly silly and could create some very bad situations. As it calms down, that will be less of a negative impact. So, Greece financial reform and Goldman's are all impacts that would have taken the market down had it not been for the very robust economic background.
Could Greece still do it? I mean, the situation doesn't appear to be getting much better in Greece. Even though you see yields come in today, I mean, it's just kicking the can, as a lot of our guys say, down the road.
Yeah. Two things on that. The first is a rescheduling or a default by Greece is pretty well discounted in the market now. Greek bonds have been yielding 9% at points this week. That's a spread of, what, 450, 500 basis points over German bonds. That suggests that investors don't believe they're going to get all their money back. The other thing is the weakness in the euro is actually really good news for exporters, great news for German business. So it ain't that bad when you look at it, and a lot of the likelihood of rescheduling at some point on Greek debt is actually discounted in the market.
All right.
Hey, Jim, thanks so much for spending some time with us. Jim McCaughan from Principal Global Investors.
Have fun at Milken.
Thank you very much.